Very good evening, everyone. Welcome to Saturday Talk number 226 at Janyu Technologies. Today's session is on investment awareness and financial planning, a subject that is relevant to all of us, regardless of age, role, or career stage. In a world where financial choices have become increasingly complex, it is important to understand the basics of risk cover, emergency planning, retirement planning, and the long term power of disciplined investing. We are pleased to have with us Mr. Manthan Shah, financial advisor, partner, and financial planning specialist at i3 Wealth Management. He has previously served in senior roles with OYO, Times Innovate Media Limited, and Growthworks, bringing with him experience across business leadership, revenue management, sales, and client engagement. Today, he will help us look at personal finance as a simple, practical, and relatable manner. I hope all of us use this session to ask questions, reflect on our own financial journeys, and take away a few ideas for a better financial decision making system. With that, I warmly welcome Mr. Shah and invite him to take the session forward. Over to you, sir.
Thank you so much, Mayank. Thanks a lot for such a lovely introduction. Hi, guys. Good evening. My name is Manthan Shah. Yes, the whole world now is completely into strategies, building their own future. A wise kind of an advice is very much important here. That's what we have been doing since last almost 13 years from now. So yes, introducing i3 Wealth Management to you. So i3, as the name suggests, basically 3I stands for initiate, invest, and insure. Okay, so why such a such a different kind of a name? Because yes, we have been into this insurance and investments market since almost 20 years from now. We have worked in corporates. This is a partnership firm with me, including me and my partner, Mr. Kaushik Bhanushali. Okay, we both have been running this business successfully, and we both have served into major corporate, like starting our careers from Aviva Life Insurance, starting as an advisor from there. Up to reaching at a branch head level. The whole idea behind generating and starting this business was that we met so many people in our lives, because of course we were into sales. Job was to meet, but we never knew that our job will take us to the same kind of business, because when we meet people, we meet three kind of people. Okay, one is that the person says that yes, I have done few investments. Then we ask why have you done these investments? The answer is like, I wanted to save tax, hence I made investments. Second guy says that, my friend was doing it, he recommended me, so I am doing these investments. And third guy says that I want to make some savings for my future. That's why I'm doing these investments. So all three answers were absolutely logic, absolutely at par. But when we ask that, when would you need this money? Have you affiliated any kind of a goal or any kind of a milestone to these investments? The answer was blank. I don't know the people, the lovely audience who is listening to me, falls in what category. But yes, definitely, if you can relate in any of these categories, yes, the another 55 minutes is for you completely. It will be an eye-opener, I am sure, because we have been doing this presentations online and offline majorly into companies like Times of India. Then we did it in Gulf Oil. We are about to do one in Vidal Oil as well. Plus, there are like another 25 more corporates in last 2 years that we have done these kind of presentations. And trust me, the response was an eye-opener for us as well. That, means so many people at some big levels, but somewhere they were lacking in the kind of management of the money. Earning money is not a big game here in Mumbai, but managing money is one of the major tasks in Mumbai. But of course, I see well qualified engineers and accountants here on this presentation. So yeah, I would only suggest one thing, that you do your job and let us do our job well, so that everything is managed quite well. All right. So yes, moving forward, the first point is that you have to initiate that thought and that particular thought of saving or investment into your mind. Only then you will be able to move forward, right? So initiate is the first and the foremost thing that the people should do. Of course, after initiation, what? Invest in multiple strategies, multiple avenues that are available in the market. The best ones And of course, the last but never the least, the safety net of our life, which is insurance. If God forbid, but if insurance is not there and something goes wrong, then that safety net is very much required. That will be, if the safety net is not there, then that will be a leakage in your bucket, of your savings bucket, right? So yes, moving forward, so that's how I3 Wealth Management was started by us. And this session, we would name it as a pathway to financial freedom. Now, what is financial freedom? Well, financial freedom is something which is, I don't have to look for a price tag or a kind of a lifestyle that I want to live after a certain amount of years of working. That would be basically a retirement, or in this such age as well, which is a working age, right? So we'll just definitely go through it. So the cash flow, okay, before giving you any kind of a gyan session, I know it's a Saturday evening and it would be, you would be like, when does this end and we start enjoying our weekend? But I really want you guys to invest your this particular weekend into whatever you see in front of you in the next 50 minutes. I just want you to give one or multiple thoughts about it, that if I start doing this way, will it be really, is it really logical, or will it really help for me or my future, right? So let's go ahead with it. So the thumb rule for cash flow management, 50-30-20 rule. Everything is a very simple basic, and you would have come across in your life that 50% you can spend on your necessities, 30% on your comforts or luxuries, 20 has to be saved. Okay, so of course, by when I say save, when of course it's now not a one-to-one, it's like a one-way communication from my end. So definitely I would like to draw this point. There is a difference between saving and investing. Okay, saving is that you're just saving money in your bank account or in a locker or in a safe in your house, whatever, right? That's called saving. But the investing means, where you are expecting growth, where you are expecting that this money will give me more money in future, while I'm generating money and more money for my future, and I'm fueling that kind of a bucket, right? That is called investing. Okay, investing, saving is adding money, investing is multiplying money. Okay, so yes, 20% of your income has to be into investing and not saving, right? Emergency fund, yes, we will come on that. Prioritize liquid funds, again we'll come on that in future, in the upcoming slides. Plan expenses early, yes, again, the forecasting of your the anticipation of your financial milestones is something what this point says. All right, and review and adjust, that is something very important that we should do in our investment life. Okay, benefits of planning expenses early is, you avoid overspending, you get better investment opportunities and increased financial security. All right, that's okay. This is something which is your life revolving around. Okay, most financial goals, they involve family, right? Plus your personal goals as well, right? Buying a car, buying a house, child's education, dream vacation, child's marriage, a peaceful retirement, buying an expensive watch, or starting your own business. That would be on your cards, definitely, right? Some social cause, some investments, huge investments for social cause. Again, I have a couple of my clients who are into that, who are aiming or investing just for that particular purpose for social, right? So almost all financial goals, they involve either self or family, right? So first, what is emergency fund? First of all, I would, of course, it's quite old now, but yes, congratulations to everyone. We have survived the phase of COVID. The many people who are not there with us, some unknown people, but yes, we have survived that phase. But yes, that phase, you and me, we very well know how much have we suffered, and how much has so many people across the globe have suffered with respect to jobs, with respect to incomes, with respect to business, with respect to health, with respect to all the kind of what do you say, all the kind of things that you were not able to do it, right? So you were confined to one particular house, one particular area, and for so many months you were locked down actually. But yes, that's when the emergency, so that should be ideally an eye opener. I should not be saying this, you guys should be saying this to me, that yes, emergency fund is something that you need always in your life, right? So, okay, not only COVID, but yes, I have many of my clients, they are like quite young, between 25 to 35 of age group, and they said that, I just want to break from this job thing or working and all, just for another 6 months or so. But yes, have you provided yourself with that 6 months of salary or a 9 months of expenses, basic expenses? If not, then yes, this is the time when you have to plan for an emergency fund, a contingency fund, so that you have at least a peace of mind. And whenever you wish to take a break, you can take a break. Of course, that's voluntarily. Otherwise, if any kind of emergency like a COVID, and right now currently the war and everything is going on, the global geopolitical things are like worsening day by day, that's when you need a 6 to 9 months of your expenses absolutely intact in your, either in a bank account or any kind of a liquid mutual fund, wherein the money never goes down, it just goes up and up, but at a very low rate of return. But yes, definitely more than a savings account, right? So yes, emergency fund is very much required. I would just request you one thing, that I will be keeping on rolling the slides one by one by one. In case if you have a pen or paper or any notepad on your laptop, please note down the questions of whichever section you feel to, and we will answer all the questions to you after the session when the Q&A starts. Right? Let's go ahead. The major and the most important thing which should be considered is the child financial plan. Now, child financial plan, I see, of course, many engineers out here. There is a rising education cost right now going on in the country, right? Of course, the engineering cost that you guys would have done at certain amount of fees, at certain amount of all the monies that you would have paid to get that degrees, that would be at certain year, on a certain year at a certain age. So 2012, in the year 2000, okay, so in year 2000, with a scholarship level and with the kind of arrangements of the government structures with respect to doctor and MBBS was there. I think private institution as well, around in the year 2000 it was at 2 lakh to 5 lakh rupees. In 2012 it was around 10 lakhs to 25 lakh rupees. 2024 it was around, it is still around, like we are in the same, almost same years, so 50 lakhs to 1.5 crores in case if you want to do masters or MBBS or study further, fellowship and everything, it costs this much at the max. Yes, the amount is expected to rise up to 2 crores to 4 crores in the year 2036, right? So the whole crux of this entire discussion is that the inflation, overall inflation, is at around 13.16% year on year. Okay, that's a doctor or MBBS cost. Now, if we talk about MBA, yes, MBA cost is 2000, in the year 2000 it was 1 to 2 lakhs, 2012 6 to 12 lakhs. Almost current years, if we ask, that's around 15 to 25 lakh rupees, and it is about to go from 35 lakhs to 50 lakhs in another 12 years. So why I've taken 12 years? Because if somebody has passed out in the year 2000 or 2012, that entire, like plus or minus 2-3 years, the kid, if they have the kid and the kid is going into MBA in the next 2036 to 2040, this is the future value that you have to make for an arrangement of for your kids' MBA. So MBA inflation is somewhere around 9.13%. Now comes the interesting part, which would of course maybe interest you, is the engineering cost. Okay, now I am not an engineer. Okay, so please correct the data if I am wrong. Okay, so 2012 it was costing around 1.5 to 4 lakh rupees. 2024 it is costing around 8 to 12 lakh rupees. I'm just talking about the degree part, okay, not the MS or the extra curricular, extra degrees. I mean the PG degrees, right? And by 2036, it is going to be 18 to 25 lakhs. And of course, by 2048, this would go to around, say, on minimum side, around what, 30 to 60 lakh rupees, somewhere around 30 to 50 lakh rupees, maybe, if I consider a 9.77% of inflation, which is going on since last 26 years on an average. And of course, this is aspirational, but yes, not even a single parent would not plan for his or her kid to go for this. Harvard, Stanford, London Business School, NCR, and Wharton. So MBA cost in 2024 is this much, is expected to rise up to this much. which is, in case if I even say a Stanford, then it is 1.922 crores, which is expected to rise in 12 years up to from 3.4 to 3.5 crores. All right. So this is purely data. This is purely like taken out from the sources, relevant sources, plus minus here and there. Depends on what kind of year the kid falls into, when the engineering incurs or MBA incurs or in doctor or MBBS or higher studies incurs. Now, overall average inflation, education inflation is from 10 to 12% per year. This is the problem. Now, the solution. What is the plan of action, Manthan? If you are showing me this many crores and crores of number, which yes, a kid is, this is the value of that kid's education till the time he or she becomes independent. What is the plan of action? Yes, this is the plan. So for a 4 crore of MBA, 12 years from now, 12% CAGR. At the rate of 12% CAGR, this is the amount of investment per month SIP required in any mutual fund. Okay, just to make it clear, we are not promoting any single particular product or a fund or a mutual fund, nothing. These all numbers are indicative. They are, the CAGR is at 12%. We have calculated. Why 12%? I definitely justify that in the upcoming slides, but 12% is something for a longer term, yes, which is what we can actually calculate for. Very conservative number, but still in investment, there is a saying that, plan for the worst and pray for the best. We are praying for the best to happen, but yes, worst case scenario, I feel on a personal note, yes, 12% is quite achievable. In last 10 years, there are funds which has given way far higher than 15%, 18%, but my ethics says that, I have to show you the worst. So worst case scenario on a conservative side, if this SIP grows at 12%, yes, this is the amount of SIP required. Accumulate this 4 crore of money for the MBBS. 15 years from now, in the case of child becomes after 15 years, gets into MBBS, then 80,000 is the money per month, which investment which you have to make at 12%. The same way for MBA, the amount is 15,000 rupees per month after 12 years or 10,000 rupees per month. The same goes for engineering as well, because the costs are almost the same. So 12-15 year scenario, this is the amount, keeping CAGR constant at 12%. This is how this would look like. And in case if it is a top B school, 3.8 crores. This is everything is without scholarships, without any loans, and you just don't want anything like, you want to prepare for the worst of your child's future. Then yes, this is the amount that we need to accumulate. For that, we need to invest at least this amount at 12% for next 15 years, right? So let's move forward. This is something very interesting. These are the comparative returns across investment options. This is a savings account which fetches 4%, a bank FD which fetches around 6%, and equity-based MF which can savings and FD, they have a guaranteed rate of return, but that is as of now. If you remember, 10-15 years back, the FD rates used to be around 9% or 9.5%. In the year, I think 2000 or 2001, the bank FD rates were almost 10-11% as well. Okay, so you would say that, why this bank FD rates come down? Okay, even the PPF rates or PF rates are not guaranteed. PPF and PF rates used to be around 10%, 9% years back. Why does it come down? Okay, there's a logic behind it. If you can, of course, you can Google it, you can research about it. There are just developed countries. So any economy, any country are in 3 stages. One is underdeveloped, one is developing, and one is developed. So we are in the developing phase right now, emerging and aspiring to become a developed economy. Countries like, as I said previously, countries like Japan, South Korea, Canada, US, they are developed economies, right? So if you see the bank FD, even UK in that case, if you see the bank FD rates, they are way far lesser than our bank FDs. Okay, why these interest rates lower? If you research, before COVID, Japan or South Korea, these countries had FD rates in minus. Can you believe this? They want the government want their population to spend money, right? So when does their interest rate increases? Because that's when the government needs money for the overall development of the economy. That's where the interest rates are high. Okay, as the government develops the economy, the infrastructure, whatever kind of projects they are into currently going on. They need money. If they need money, they will give you a higher interest rate. When they don't need money or when they start declining the interest rate, that means they are now not needing that amount of money which they used to have it. So the rates falling down is a positive sign from an economy point of view. Okay, so overall, our FD rates are right now for 2 years, 3 years, 5 years max. Okay, post 5 years, there is a revision. There will be a revision. And if you feel that our Indian economy is growing very nicely, there is a rate cut. There, if you have heard about it, RBI proposed a rate cut, 25 bips, 50 bips, 10 bips, whatever, right? Basis points. So these points are decreased because there is a development in the economy, right? So bank FDs, PPF, PF rates, yes, the taxation is totally different. That's a different chapter or discussion altogether. But yes, this particular rates are fixed. But vis-a-vis when the economy develops, yes, there is an equity or the overall shares portfolio of the mutual funds, they increase. Why? Because of course, everything is inversely proportional, right? So in case if your fund grows at 10%, so this is a simple amount, simple calculation, 10,000 per month. If you put for say 10 years, 12 lakh rupees is your net investment, against which in a savings account you will make 14.72 lakhs, in a bank FD you will make 16.33 lakhs, in a equity mutual fund where it gives only 10% CAGR, your money is at 20 lakh point 20.15. If it grows at 12%, we come at 22.40, and if it comes at 14%, you end up at around 25 lakh rupees against your 12 lakh rupees of investment. So this is something which you'll be able to kind of project your future along with the kind of investments that we have and the multiplications of this. Right now, this study also says that the moment you start going longer and longer, the more compounding it happens, and proportionately there is a more amount of money which comes. Now, if you see here at the 10th year, you had invested only 12 lakh rupees. Okay, let's take 14% wala example. Against 12 lakhs, the value was around 25 lakh rupees, which is almost double. Okay, on the 20th year, it would be 24 lakh rupees, the net investment, against which your money is at 1.17 CR, which is almost 4 times, not like double, 2 times, it is 4 times. Why? Because there is this magic of power of compounding. It's light in it. So that's how you get. So we always recommend that investment in mutual funds, especially into SIPs, are for people who has a long-term vision and a long-term horizon and long-term goals. Only then you'll be able to see this magic which will happen. And it has happened, like turn which has come to the people who have stood invest, right? So let's go further. Again, almost very much similar example. Mr. Ramesh started with an SIP of 3,250 at 30. Mahesh started at 10,000 rupees at age 40. Suresh started at 44,000 rupees at age 50. Everyone reached to 1 crore at age 60. The same example what we kind of learned in the previous slide, the cost of delay part. Now, till now, whatever we have discussed and understood is that yes, everything is fine, nothing is going wrong, I am immortal, nothing is going to happen to me, and there are no risks in my life. I'll earn, I'll invest, I'll be 60, 80, 100, 120, whatever, right? I always wish and kind of pray that this happens, but I'm praying for the best. Now comes planning for the worst. What if this income stops or this income decreases vis-a-vis your family needs? That won't stop or that won't decrease, right? So what are the kind of risks that are there in life? Of course, one is death, right? Untimely death, right? So of course, life insurance is something. Of course, it's a very common, you would have come across so many times in your life till now. अरे लाइफ इंश्योरेंस ले लो, लाइफ इंश्योरेंस LIC वाला, ये लो वो ले लो, पॉलिसी बाजार. Yes, in COVID we have given claims. In COVID we saw these untimely things happening, worst case scenarios. Not only COVID, but yes, we have even seen normally, people passing away through heart attacks, through accidents, whatever. I mean, at very young age also. I mean, not even like 50, crossing 50, crossing 55. We have been dealing with such kind of cases. Okay, not only life insurance in that case, but yes, health insurance is also, which is a major part of the portfolio, gets wiped off in case of health insurance. Appropriate and adequate, very much required terminologies. Adequate and appropriate health insurance is not in place. People have swept away with their savings. I mean, they're back to square one after 10 years just by having one or two cases in their life. So that is something which has to be in place. All right. And there are two more things. Okay. One is very much, it is required, but not many people know about. There's something called as critical illness insurance. Now, what is critical illness insurance? There is a list of around 45 to 50 diseases which disables you to work at your normal capacity. So in case if you're diagnosed with any kind of a major disease, you are critically ill. But in insurance it is said that uh, um, living with a disease is more expensive than dying. Okay, so if you are not well and if you're not working to your full capacity, your income is stopped or decreased because your capacity is not full, and you're living as well, so your medicines, your living expenses and everything, plus the lesser of income, the income decrement, and that disables you to plan your future.
Last few years, lot of other investment opportunities are coming beyond shares and mutual funds in the traditional. So, like real investment, trust funds, commodity trading funds. So, what is your take on the likelihood of these getting returns to investor, and what are the risks involved? Second question is that now, is there a way that an investor in India can legally invest in cryptocurrencies? And thirdly, I have my personal opinion on health insurance. I think it is very essential for youngsters to take that. Surely, as you said, that between a job change or a situation that demands that, that's essential that everyone has a job insurance with the spiraling health costs. But the point is that the health insurance looks very rosy when one gets into it. But when the person tries to make a claim, the whole system is such that the claims are either rejected, not in most cases, but many cases, or there are certain riders which cut the actual payment. Now, I'm not sure what this cashless system which has been done by the government in some of the health insurance, but how good it is working on ground, because generally people complain, and if you look at the investor people complaining about health insurance, although a very desirable thing, because in the next 10-15 years these costs will get more sky high, but somewhere along the way, I think the government has to play a part to make the paying public more attracted to this, because many people I know are not keen on doing health insurance because they say milta to kuch nahi hai, or they'll make us go run in circles. So that is the general take.
So your first question is, yes, there are many other investment avenues which have come, which is the REIT funds that you have told, commodities that you have told, tills that you have focused on. Yes, there are investment. There are good investment opportunities. But when I see from a mutual fund perspective, Anilji, I would say that, mutual funds is a way far more calculative risk, not a risk per se. So just don't get scared with this word called risk. It's a calculative risk. Plus, you are invested in a plethora of sectors, having a plethora of stocks in every sector. Okay, so you are not banking on one single commodity or one single concept like a REIT, like a pharma, like an energy fund, or like those thematic funds that we get into. Okay, so initially what my recommendation would be, first make your generic mutual fund portfolio super strong and very much adamant, which cannot move your money or move your funds from level A to level B, like a minus B. And if the market falls, the entire fund falls, or if one sector falls, the entire fund falls. Okay, so my recommendation would be that first manage your portfolio in a way wherein you are invested a good amount in large cap, good amount in mid cap, good amount in small cap, some part in a category called large and mid, then a category called multi cap, then a category called flexi cap. When you complete to invest in all these 7 sectors appropriately, post which still if you have more money and more funds to evaluate, then you can go for such kind of thematic or a commodity based or a concept based investments, so that at least in case of that conceptually, because in COVID what happened, the pharma fund gave 100% returns in 1 year. Why? Because that was the only sector which was running, right, in the whole era of COVID. But when it came to post COVID, when the recovery happened in last 3 years, pharma sector is minus, right? So every sector, every commodity has a rally. Everyone over here has witnessed gold and silver in last 1.5 years, right? It has crossed the multi-years returns of equity also. But now in last 6 months, what is happening? It is stagnant. Every concept has their rally and then they become stagnant. And any given day that rally will come. Any given day it will, wipe out all your negativities in the funds, and it will go away. I mean, go up. Absolutely. Right. So my take is that first you against that, if you go for a large cap fund or a multi cap fund, you are invested into at least 7 sectors, which is including banking, IT, pharma, construction, manufacturing, export, so many sectors, and every sector will have at least 3 to 5 companies, right? So any government policy change which comes, and one sector, if the market falls down by 1,000 points, Sensex, right? It is not that all the sectors are down. It is like 1 or 2 or 3 or 4 sectors are down out of 7. The 3 sectors are still up. So the downfall protection is more in a normal mutual fund, wherein there are several categories vis-a-vis a commodity or a gold or a conceptual, is my take on this particular question of yours. I hope it is answered.
Thank you. But only thing, people are getting tempted with the crude oil like volatility. Some people
Correct.
will tempt it. So it is basically a choice that you have to be
100%.
alert on it. I think
Absolutely.
probably alertness is the key.
Right, sir. Absolutely right. You're right on your part. But again, I'll tell you that's a crude oil right now at $110 per barrel, which was at 63, 670 rupees last year per dollar per barrel. This entire time is very much temporary. Okay. The entire war thing might might go on for another 5-6 months more, 1 year more, 1.5 years more. As I told you, sir, mutual fund investor has to be a long-term visionary with at least 5 years plus of horizon. If this is happening right now, the war thing, and the markets are at volatility, that is a blessing for a SIP investor. Take my words and mark my words on this. Why? Because they are buying at such a low average, and whenever the market recovers from this point, see, market has already seen 85,000 Sensex, right? It is now at 75,000. So there is already a scope lying of 20%, almost 15% hike from here, right? So I know my ceiling. Now what happened in COVID? Before COVID, market was at 45,000 points. Everybody was saying, wow, this is the lifetime high, this is the peak. Abhi isse market upar jayega hi nahi. And COVID happened, market fell down from 45 to 28, right? Almost 40% down. Did anybody imagine at that level, 28,000, that market will go to 85,000 in next 5 years? No one. So any time there is history has witnessed this, that anytime there is a major fall or some geopolitical thing happening overall globally, the shooting up of the market is tremendous in the next 2-3 years. So always remember, sir, that right now if you start your SIPs, you are buying at it's a sale in the market right now. You buy any mutual fund, it's at the sale of 20% sale. That is the scenario of any equity stock or a mutual fund NAV right now. So you're already at a 20% discount. You are buying it every month on a different NAVs, and you're accumulating units. Once this NAV goes up, you are getting your 12, 14, 15, 16% growth in the next 5 years. That's about. So second question about crypto. Again, sir, crypto is something which is not in anybody's control. See, when I talk about mutual funds, again, I'll compare everything with mutual funds. Pardon me, but I have got like good points related with, because see, in mutual funds there is a fund manager sitting. He has the control of shifting from one stock to another, rejigging the portfolio, shuffling the categories and sectors and everything. In crypto, I don't have any control. If Tesla says that from tomorrow onwards I'm going to accept only money only in cryptos, the crypto shoots up, and then it's like, no, that was a fake rumor. Crypto falls down. Again, I'm banking on one single commodity. My entire money is banking on one single thing. I don't want that to happen. So wise investing and little bit lesser risky investment would be always a mutual fund, right? That is the second
Thank
thing
you.
which is answered. And third thing, health insurance. Health insurance, sir, I mean, government has proposed, but ideally it has to be signed between the insurance company and the hospital, that this is the deal. If they accept it, only then the cashless will be applicable there. Otherwise, it's always reimbursement, right? So cashless everywhere is happening. We have to wait for that. Okay, it's not yet completely fully operable. First thing. Second thing, when you say that, sir, वो rosy picture दिखता है, but वो claims मिलता ही नहीं है कभी भी. I have seen people this, that. Sir, everything agreed and accepted. That is the only reason why we ask people to refrain buying online or refrain to buy from any online site. Okay, I would not name any. But in health insurance, even if I pay 2,000 more, I want that person to be present over there, or at least help me out and available over a call. That, Manthan, my father is admitted in this hospital. They are denying cashless. What is the problem? Please look into it, right? So I immediately make calls. I send one of my representative in the hospital so that the person, the relative, is focusing on the treatment of the parent or the patient, right? And this particular thing is taken care by me or my team or the TPA department of the hospital, right? So one cashless thing, sir, we even go to the ombudsman. We have gone to at least 5 claims we have gone to till ombudsman have got it claimed from them. I have proofs. Definitely when we meet one-on-one, I'll share those with you. We go to ombudsman. It takes 4 or 5 months, but we get that claim settled anyhow from our end. Okay, I'm not at all boasting about it, but yes, we do, because when we feel this money is claimable and the insurance company is denying, yes, then nobody can stop us to get the claim. So the mediator, the middle person is very important when you buy any kind of health insurance. That is very important. Many people say, Manthan, ये कंपनी का आप दे रहे हो पॉलिसी, इसका क्लेम रेशियो अच्छा है क्या? मैं बोला, सर, वो कंपनी का क्लेम रेशियो छोड़ो, मेरा क्लेम रेशियो अच्छा है. I get the claims done from that particular company. So you be rest assured that हाँ, इसके लिए बहुत सारी चीजें होती है. You have to declare everything from the day one. Your any kind of a disease, your any kind of a medication, your any kind of a surgeries which has happened in the last 5 years, your smoking habits, your drinking habits, your lifestyle, your height, weight, your BMI, everything is taken before the policy is issued. Only then the underwriter feels that he is insurable, and then only once they give you the policy, then there are a few waiting periods for few compulsory waiting periods for the first 2 years, that वो back pain और cataract and knee replacement, hip replacement, वो सब आपको नहीं मिलेगा. बट उसके अलावा कुछ भी हुआ तो आपको फर्स्ट 30 days में आपको नॉर्मल क्लेम भी नहीं मिलेगा. When you buy the policy today, 16th May, 16th June तक I won't be covered for any kind of a disease like typhoid, malaria, dengue also. That cover starts from the 31st day of the policy. In the first 30 days, I'm only covered anything which happens accidentally. So these are the TNCs. There are many black and white things, small letters में जो लिखते हैं वो लोग, many things which are there, which we explain it to the customers, and only then we take the health insurances from them.